Hey guys, welcome to another platform tutorial where we're going to focus on some order entry, specifically focusing on call options. Now this is Coca-Cola, and I'm going to do a all-inclusive call option position where we're looking to build an entry order, but followed up by our stop and our target order that allows us to set and forget this trade. So what that really means is you're not going to have to wait in front of your computer for things to occur. The platform can do it for you. It can handle the entry and the exit. But I want to make sure you guys see how this is set up. So this is just buying a call option. Coca-Cola is our stock. And you can see here, I've already mapped out kind of our trade plan. So if we look at this here, Coca-Cola has been kind of somewhat trending a little bit higher and is coming to this point where it's looking like it's about to break to the upside, but it's starting to experience a little bit of weakness. So if prices fall back down to around 48 and a quarter, I would like to either buy the stock, but in this case, we're going to buy the call option. Call options are pretty cheap right now on Coca-Cola, so we can comfortably go ahead and buy a call option. Now, if the price drops below 46.91, we're going to sell this call option. I like to use protective stops on my positions. This way, whatever I invest on the call option, I'm not actually risking it all. We're just risking a small portion of it below our stop. And if prices hit 51.66, this is our target. So understanding a little of the context of the trade, I think, helps when we're going and building out our order. So that's why I do a little bit of review on the context here. But essentially, if we're looking to enter around 48.28, I'm always going to start my position in the Analyze tab. Why don't I start it in the Trade tab? Well, because I don't want to trade something that I haven't fully analyzed, how time decay and volatility changes and the price of the stock moving. How's that going to affect my risk and my reward in this position? So versus building something out in the Trade tab and then sending it to the Analyze tab to analyze, I always just start in the Analyze tab. I actually never use this Trade tab over here specifically, and I think you'll see why. But once I'm in the Analyze tab, you can see that I can actually look at an option chain just like I could if I were looking at the Trade tab. So I'm just here in the Analyze tab. What this gives me the ability to do, though, is actually analyze, and I've already typed it in here, my entry price, my stop, and my target. What this allows me to do is build a simulated trade down below by expanding the option chain here, choosing the option that I want to buy. In this case, it was the 47.50 call option. And so this is the current price, 320 by 360, but we're expecting that prices are going to fall on the call options when the price of the stock falls. And what we've done is we've anticipated, based upon our entry price of 48.28, that we're going to end up paying around $2.70 for these options. And so that's about what we're anticipating. Our risk is $72 to make 218 bucks, and that's a per contract position. So if you had 10 contracts, that'd be $720 risk for $2,180 potential profit. So contract size is everything. This is just a one contract position to show order entry. So once we've analyzed our position, now we actually have to make a real trade out of this. So the easiest way to do that is to right click on the order anywhere on that simulated trade, right click, create duplicate order. This is actually going to bring up the order entry bar from the bottom of the platform. You'll see if I click the little tab here, it kind of hides it. If I click it again, and there's my order. So what we see here is just a buy order to buy the 47.50 call options for 270. But understand that we don't want to enter this now. We only want to enter this if the price hits 48.28. So if you were willing to enter this call option now, the price is at 360. You would just, I'll show you how to set up the stop loss and the target on this in a second, but you wouldn't bother changing the limit price too much or putting any conditions on this because you were just looking to enter now. But we're not looking to enter now. The price is at 49.53. We're looking to enter if prices hit 48.28. So Thinkorswim lets you go ahead and click on this cog all the way to the right. So it's this little gear looking thing here. So if I click on that, it's going to bring up some order rules. Now the order rules consist of two sections. Well, really three sections. The upper section is the order. The middle section are some conditions that we could actually suggest. So if this is occurring, then send the above order to the market. And then down below is a simple plain English description of what you're telling the system to do. So basically what this lets us do is come over here. I'm going to slide this out of the way, and because we want to submit some conditions. So submit these orders when at least one of the following conditions is met. So under symbol, method, trigger, threshold, what I can do is I can click underneath the symbol and it drops in Coca-Cola, KO, because we're working on Coca-Cola. The method, so the mark price, which is the mid price of Coca-Cola, mark equals mid, that's Thinkorswim's language, is less than or equal to. So only purchase this call option if the price of Coca-Cola is south of 48.28, which is our entry price. Okay. Now, we obviously know that we're not going to have to pay $3.60. Those are today's prices. We anticipated earlier that we would pay about $2.70, but even that, depending upon time and volatility, things may change. So what I really like about Thinkorswim is the ability to say, okay, you can place a market order, which says if Coke is ever at or lower than 48.28, then buy this call option at the market price. And with Coca-Cola, I would be very happy paying the market price because the spread between the bid price and the ask price is really not all that wide. It's only about 40 cents right now. When the market is open, the market is closed right now, but when the market is open, that's only about 10 to 15 cents wide at the most. So I'd be willing to pay the market price for something like Coca-Cola. But if the options were not as liquid and the spreads were not as narrow, then you could pull this little trick, which is pretty cool considering Thinkorswim is one of the only brokers that I found that lets us do this. And while I haven't tried every brokerage house in the world, I've tried a lot of the major ones here in the US. So price rules, market, we're going to change this back to limit. Now, instead of linking the limit to a specific price, we're going to link the limit to, I'm going to scroll down here and choose mark price. Now, the mark price equals mid for Thinkorswim, so the mid price of the option. So think about this for a second. Let's walk down here to the conditions. If Coca-Cola is ever less than or equal to 48.28, submit the above order. So what the platform is going to do is it's going to look at the 47.50 call. It's going to say, okay, what is the mark price or mid price of the 47.50 call right now? And that is upon this condition being met. And if we have this limit offset with no offset, it'll simply grab the mid price at the time that condition is met and place the buy order to buy that option at the mid price. And we're negotiating between the bid and the ask, which is how we want to enter our positions. Now, we might not get filled because we're going right in at the mid. And so if we want to improve the probability of getting filled, we would say, okay, I am willing to pay you 5 cents more than the mid price to buy this option. And that will typically do it on something like Coca-Cola simply because the spreads are really not that wide. And so you'd want to look at how wide are your spreads normally and adjust this offset according to how wide the spreads are normally. But normally these spreads are 5, 10, 15 cents wide. So if we pay 5 cents above the mid price, then we're pretty certain we're going to get into this position. And we don't even have to guess now or anticipate what we're going to end up paying and risking not getting filled. This will tell us what we have to pay and add 5 cents to that. Which is really great. So we'll save that, and that's our entry order. Now, to submit the entry order is easy. We hit confirm and send, and we're done. But I would like to add another order in this sequence. Now, what would I like to add? I want to add the stop and the target. So we go to single order, and you'll see here, if I kind of minimize the platform a little bit, single order, first triggers sequence. So I want another order to come after my entry order in this sequence. And what kind of order would that be? Well, that would be if I right click anywhere on this order, it lets me create an opposite order, which is basically going to say sell my call option. And now we can come over here and hit the conditions, which is the cog to the right. And we can see because our conditions from the entry order are here, now we have to give it the new conditions. Under what conditions would we want to get out of this option position? Well, for number one, if the stock is at my stop loss, which is at 46.91, then get me out of this position. I no longer want to hold this call option. But also, if I click down below and I say, if Coca-Cola is ever north of 51.66, that's a target price for us, then I'm willing to sell my option at its increased value. And we could try to negotiate our way out by using the limit linked to order. But a lot of times when you want out, especially if your stop is being triggered, when you want out, a lot of times what I suggest, until you get kind of deeper into your option trading, I just suggest using a market order to get out, right? Because a market order is going to guarantee you're out. If these conditions are met, boom, you're done. There's no funny business. There's no, I wonder if I'm out. Did my limit order fill? It's just a market order. You're out. You're done. And so, if you're newer at this or you're not too experienced with this type of advanced order entry, then just stick with a market order out. You'll be good to go. We placed our conditions in. I'll go ahead and save this. And once we confirm and send, you can read very carefully what we want to do. So we want to buy one Coca-Cola call for 5 cents above the mid price. It's the 47.50 call, but we only want to enter this call option if the price of Coke is at or below 48.28. So if the price never gets below 48.28, our long call, the call that we want to buy, the order will never actually get sent to the market. Now, what if we get into this position? If we actually buy the call option, it'll submit the next order in the sequence, which is sell the call option at the market price, but only if Coca-Cola is at or below 46.91. That's our stop. Or if it's at or above 51.66, that's our target. We'll get out of the trade and we are done. We have to press send and it's in. How do you know any of these orders are in? Well, if you go to the monitor tab, what you'll see is I have some other orders pending here on Cisco and TLT. But if I go under my working orders here, you'll see all of these orders working, and you'll see some of them are just working now as we're just waiting for the market to open. Some of them are waiting the conditions, which are the conditions for price to enter our buy or sell zone before entering this option position. So hope you guys got a lot out of this. Thanks for watching. If you have any questions, always hit us up, support@tradersarmy.com. We're happy to help in every way that we can. Enjoy your day. We'll see you soon. Bye-bye.